So this is on 28th November. The market is open, and I remember uh, during this time here, it was March 2020 when oil went to historical lows, and at this point, oil became uneconomic to extract and refine. I think it was around $8. So it's not even $8. It's around $50 or $60 per barrel. Now that's when it becomes uneconomical to extract oil because their extraction cost. And I remember at this point here, OPEC, this the oil cartel, they came and they suspended all production until the price would recover. And from this point now, it's when we had this bull market. And this is the same bull market that was experienced in crypto. But when you go to crypto, it has corrected almost 80-90% of the move. But for oil is oil is not a free market. The supply is controlled by OPEC. So this is not a market that the, 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 the price finds its natural place due to supply and demand. This one is supply is controlled by OPEC, and it's not a free market. And there is a point that they like to see. They don't want to see the oil go below around $60 or $70 per barrel because then it becomes uneconomical to extract oil. So currently, we have a dollar with very high interest rate, 4%. No, it's 3.75, I think. And when the interest rates they rise, they lead to increase in this extraction cost. So this is the point when now OPEC comes out and starts uh, limiting the supply so that the demand can go up and drive this price higher again. So and currently, with the short-term bonds, with the short-term bond it's falling, with the short-term investors buying, dumping the dollar, we can see the short-term weakness in the dollar, and we can see other commodities like gold that has been trying to rise. You know, so this weakness in the dollar, uh, it might give room for this one more leg up for oil. And now the thing is, if you try to understand these the fundamentals behind this chart, like we can see the Fed coming out and saying that there is high inflation. That is why they are increasing the rates. Now, if there is high inflation currently, and yet the price of oil has been falling, the price of wheat has been falling, Yeah, you see, price of corn has been falling. You know, UK oil has been falling. Now, if they are struggling to fight inflation as of now, and yet the commodities are at low prices. Yeah. No, if indeed we have this one more leg up to go, these commodities when they rise, they drive in inflation into the economy, which means that the inflation will be even much higher when we have this one more leg up, and the rates they will have increased. You know, so we will have a picture whereby uh, when prices are at record highs, the interest rates are at record highs, and that is a recipe for recession because now the economy has overheated. So I am highly anticipating that we'll have this one more leg up because of the current or the short-term bond yields which are falling, which means that the short-term investors are dumping the dollar, but the long-term investors they are buying the long-term bond yields. Okay? Because the short-term yields they are rising and the long-term yields they are falling. Yeah. So at any price, at any moment from now, I think oil may start to rise. But for those who don't trade oil, the CAD JPY, the currency, this one is it is positively correlated to oil because Canada Canada exports a lot of oil to the US, and on the other hand, Japan imports almost it actually imports all of its oil, you know, and Japan is heavily reliant on it's a volcanic country, so they don't have these natural resources, so they import almost everything from steel to oil. So they have to keep their interest rates at very low levels because if the yen is very strong, then the imports will be very expensive for them. But one thing that really puts pressure on the yen is the oil prices. So when the oil goes up, this pair it's it follows suit shoots. So and again, when you look at these yen pairs like the Audi, yeah, and the New Zealand, you see that even the New Zealand is at the top. Yet the New Zealand Japanese yen is at top here. Yet the CAD JPY is at the bottom here. So the CAD JPY offers the best opportunity for now, the best entry. You can see it's been consolidating for months. Yeah. So any move out of here, any impulse, any breakout, you can expect some good pips. Yeah. So if this happens before the close of this year, this can be the trade of the year. So you can see when currently since the market opened today, oil has been dropping, and this pair has been falling. So the same way when oil starts to tick higher, yeah. And the funny thing is that oil is dropping, But when you look at gold, gold is pushing higher from 1618. It's up almost more than a thousand pips. And yet, when you go to the oil chart, it's the opposite. Which means that any time from now, we might have this leg up. Yeah. So the CAD JPY, this one is a decent trade. So a decent trade. So so let's watch out for the trade and oil. Yeah. So these are UK oil and also the US oil. So anytime I think should be watching the price action. If you can't trade this oil, uh, uh, watch the CAD JPY. That's I think that's the best opportunity for now. So I will be updating. I sent the charts. So this is just an explanation of what I sent. So I think that's it. It was just oil and CAD JPY.